Hi everyone, this is Rob Roy of Ellie Wave Options. We just finished tonight's TradeFinder Live, the big news being the fact that that gap on the SPY right around 400 going back to April of last year got filled. We also talked about how it doesn't appear the selling is over in the markets yet, but the global markets are all oversold and look ready for a bounce. Obviously, a big topic in tonight's TradeFinder was what is going on in crypto land. If you haven't signed up for TradeFinder, do it now. You can sign up underneath this video. We do it every Tuesday night. It's free. We talk about the markets, we look for trading ideas, and we have a live Q&A at the end where we talk about whatever's on your mind. With that, let's look at the charts. At the time of this recording, it is late on Tuesday evening, and the futures are currently up 12 points. Let's take a look at the chart of the S&P, and you can see that another down day today, and we are just a bit oversold from the 10-day moving average. Not significantly, but that gap between the 10 and the 50-day continues to widen. As we talked about in last weekend's report, that will not last. At some point in time, the 10-day moving average and the 50-day will come back together, and it usually doesn't amount to the 50-day moving average making some sort of a bullet move down to the 10-day moving average. It's the 10-day moving average moving back up towards the 50. Hence the ability for the market to bounce in the not too distant future. Here's a chart showing that gap that was filled all the way back to April of last year. We've talked about it so many times over the past year. A lot of people made comments that they didn't really think we'd go that low, but here we are. The gap's been filled. So now what? Well, going back to the chart where we can see that being just a bit oversold, we could bounce back to the upside. The question is it just a tradable bounce? It looks that way, perhaps just up to 420 because that's now resistance. Any sort of a meaningful move would have to get above 420 before we could start talking about even the potential creation of the wave 4 corrective move. Right now we're just saying things are a bit oversold. It's also the same way it is in the rest of the markets. But the interesting thing is we look at the TNX. So if we take a look at the 10-year, you can see that it moved to the downside today, even though the markets really didn't. They tried to rally, but they couldn't hold it. And a lot of chatter has been about, well, the markets can't rally with interest rates going up. Well, interest rates went down today. I actually thought that we'd have a little bit of resistance at 3%. Now it looks like with the move down today, since interest rates went right through 3%, that 3% now could possibly be acting as support. How long will this wave 3 run? That's the question. At some point in time, we will get a wave 4, but as a reminder, this is just telling you that if the wave 4 were to start today, this is the area where we could find some sort of support. But right now, it just seems like interest rates are chugging along. The gap down, the gap's got to get filled, so at some point in time, we bounce back to the upside. It'd be great to see interest rates just take a break, just go sideways for a bit, or maybe they pull back a little bit more. We're starting to get some separation between the 10-day and the 50-day there on interest rates as well. So at some point in time, we are going to get a bit of a pullback, but how far down the road that is remains to be seen. And as I talked about in the weekend report, the VIX just stays at this area around 35. I don't feel like that's enough to put in a bottom. We've been there before. It didn't put in a bottom in December, January, February, March, April, or now May. So I do think we need that big spike in the VIX, something along the lines of what occurred, not necessarily as bad, but something that occurred like March of 2020 with COVID, some sort of an enormous spike on a really ugly day in the markets. Now, I also gave the analogy of an opposing argument is that, well, perhaps that needs to happen, but we also have been really elevated in volatility for quite some time. So if you think about it as a prize fight where you have a puncher against a boxer, where the boxer doesn't have that knockout power, but his skills of just continuing to pound on you throughout an entire fight wears you down. Well, perhaps that's happening in the VIX. Perhaps the volatility being elevated is just wearing the market down. And eventually we get some sort of a bounce back to the upside because of that. It's an interesting theory. I still feel like we need that big spike in the VIX in order for the market selling to finally come to an end. The Qs, And the CCI is an indicator that we like to look at as a confirming indicator on a shorter term basis. It's a bit more responsive to the markets, and it's building an area of support here around an extreme point low that's held back in December, January, February, March. You can see that it's down at the bottom, also giving us an indication that perhaps at least the Qs are ready for a bounce. They tried today. The Qs really wanted to mount some sort of a significant rally, but every time they moved to the upside, they got sold into. Notice that right smack dab into that tap box right at the wave 5. We've talked numerous times about what a great Elliott wave pattern the Qs had, and it came to fruition just as spot on as it could possibly be. The diamonds had been the holdout. They had been the one market that hadn't broken its level of support. It was 320 on the Qs. It was 420 on the SPY, 330 on the diamonds, and they broke it so far the beginning of this week. And you can see that we're heading down. We're not too far away from that wave 5 target on the diamonds either. So perhaps we get a bit of a run back there. On the IWM, man, the small caps. You don't see them move like this very often, but a significant break below 190, again, right smack into the middle of the tap box. So you're starting to see, with this wave 5 target getting hit as well, numerous examples of markets being oversold, price targets being hit to the downside, setting up for, again, I think, a potential bounce. Perhaps what comes out of the CPI data tomorrow provides the catalyst for some sort of a bounce back. We'll have to wait and see. But looking at this chart of the IWM, it could amount a little bit of a recovery as well. We look at the 10-day moving average. It's not that significantly oversold, but with any sort of a bounce here, same as we've been talking about, now what was support becomes resistance. So that 190 level that was support in that channel between 190 and 210 for so long is now resistance. So any sort of a bounce has to get past 190 to have any sort of a meaningful impulse to the upside, more than just an oversold bounce. Also mentioned Bitcoin in the intro, and boy, it was an ugly day in the world of cryptos today. But you can see that with the 10-day moving average, it's right there, and then there's where Bitcoin is trading. So we're pretty oversold there. So bounce back to the upside. Same theme that we've been talking about. 36,000 was support for quite a while. Now it's going to be resistance. So for any meaningful move, we got to get back above 36,000. But it looks like at some point Bitcoin moves lower, not what people are really wanting to see. And then Coinbase. We also talked about Coinbase in tonight's TradeFinder, and boy, it's gotten really ugly there. Look at this wave 5 that we have here in Coinbase, 76% extension. Now we only had about a 30% wave 4, so 61.8 is where it could have held. So 76 is another close to a fib level at 78.6, and we're also a bit oversold now on Coinbase, so perhaps we jump back to the upside. We'll have to wait and see on that, but pretty ugly, not just today, but the beginning of this week in crypto land. So really wild start to the week. We'll see how things unfold throughout the rest of the week, and I'll be back over the weekend to tell you about it. Hey, by the way, don't forget to hit that like button if you like this recording, or better yet, hit subscribe. You'll be notified immediately when one of these recordings is posted. It's important, and we really appreciate it. Thanks. Take care. Have a great week. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.